Hi, good morning. Yeah, Vietnam is continuing to grow, and you're right. The GDP growth has been a bit lower than expected over the Q1 of 2023. I think it's predominantly because of the export inventory. The inventory in the U.S. and developed economies has been a bit higher than anticipated, probably through the supply chain disruption. People order a lot more inventory than needed, and so they're sitting on a lot more inventory. And as that inventory depletes over time, which we expect to probably second half of this year, we should see more export orders coming through, and that should revive the economy. Now, as for the rate cuts, yes, we are seeing the rate cuts to encourage more lending. We are seeing deposit rates in local currency around 7.5 to 8%, which is relatively attractive to domestic investors because they can leave the money in the bank and earn it 7.5 to 8%, while the BND or the local currency is quite stable against the U.S. dollars. And so the government is reducing the rates to encourage more lending and more growth in terms of credit, and that's what we're seeing at the moment. The market is relatively okay. It's flattish. We have probably EPS growth anywhere between 10 to 15% for 2023 over 2022. The valuations is in the lower teens. So I think it's quite an attractive situation at the moment, and I think the slowdown in the economy is very, very temporary. And the tourism is coming back quite strongly. We are about 60 to 70% tourism, what we saw in terms of tourism pre-COVID level.
Andy, this is JP. I want to get to those valuations in just a second, but when you look at these rate cuts against the face of slowing and contracting exports in Vietnam, it seems as though Vietnam's policymakers are trying to shift the economic growth levers from export or externally driven levers to try and support domestic consumption to help at least the Vietnamese economy ride out this turbulent time, which some say might be short-lived. But this question is, my first question is, what is the state of consumer health and consumer demand and appetites in Vietnam? Will this be enough actually to help them weather the storm? And how long would some of these rate cuts perhaps take? How long will it take for them to take effect in terms of supporting consumer and domestic demand in Vietnam, sir?
Yeah, like I said earlier, if you're a Vietnamese person in Vietnam, you can deposit a local currency in the bank and get 7.5 to 8%. So it's quite attractive. So we got to bring the rates down and encourage people to spend a bit more. The retail spending has slowed. We are seeing it in some of the consumer-driven businesses in Vietnam. And yes, the government wants to encourage people to borrow more and invest more, particularly in the real estate and the energy sector. But I think, with interest rate at this level, yes, people will continue to put money in the bank, and there is an encouragement to come down. But the challenge right now is the loan to deposit rate at the bank, or said differently, the liquidity at the bank is still pretty tight. And so even with policy decline or an encouragement by the government to decrease the rate, the banks, the commercial banks in itself will have to deal with the liquidity issue. And the LDR tends to be on the higher side at the moment.